Hi, everyone. Thanks so much for joining me today. You're watching the Money Mindset Show. My name is Krista Wetmore. And today I thought I would speak directly to the entrepreneurs out there that are watching this broadcast. And, it's interesting because this past week I was having a conversation with a couple different individuals. And we were talking about, the sources of wealth creation for entrepreneurs and small business owners in particular. And so just to kind of give you a little recap on that, if you're a small business owner, you can basically grow your wealth one of three different ways. The first being your professional or your personal investments. So those are things such as your RRSP, TFSAs, non-registered funds, as well as real estate. The second and probably the most advantageous way for business owners to grow their wealth is through their corporation. And the reason for that is an incorporated company pays less tax than a personal individual. So what that allows you to do is any retained earnings that you have within the company, you're allowed to, that allows you to grow that wealth much quicker than you would be if you were taking it and paying a very high personal tax rate on it. Now, mind you, there were significant changes last year to the income tax rules. However, there are still opportunities there for small business owners to grow their wealth. Third way that most entrepreneurs grow their wealth is through their business. So, and typically how that would work, at the end of your career, what are you going to do with the business? And oftentimes entrepreneurs want to be able to sell it and take that capital. Although selling a business is not always as easy as what you would think it would be. There's a lot of different factors that go into it. You want to make sure, and there's some different, a couple different things. So if you're thinking of selling your business, one of the things that you can do, obviously you need to have a good valuation done on it, but you also want to have it set up in such a way that when it comes time to selling it, you want to make sure it's done in a tax efficient manner. That way you're able to not only attain that wealth, but it's not always about how much money and how much wealth you've accumulated. When it comes to taxation, it's also a matter of how much wealth are you going to retain. And through the financial planning process, we look at, minimizing the taxes. So the reason that, I want to talk about this today, and it kind of mirrors very closely with what I just mentioned, the three ways that entrepreneurs can grow wealth through your personal assets, your company assets, and then selling the company. And, that mirrors really well. It's something that I always ask individuals who own different businesses is that, do you have three different plans? And the reason for that is, just as I mentioned, you need to have three different plans because all the plans work together, but they are independent of each other. So do you have a personal plan? Do you have a business financial plan? And what is your plan? What's your exit strategy for your business? Are you going to sell it? Are you going to transition it perhaps to somebody within the family? Or are you just going to close it down? But we need to know what that's going to look like in order for us to incorporate that into your financial plan. And I know sometimes when I'm talking to somebody and they'll ask, or I mention, the fact that you should have three financial plans, sometimes I get a glazed over look. But it is very important for you to have three different plans. And the reason for doing so, the analogy that I use is this is a perfect opportunity for you to crash test that plan. So what I mean by that is, let's assume that you get sick or that you pass away early or that you're going to sell your business. So this is the perfect opportunity for us to really take a look at what is that plan going to look like on paper. And, now's the time on paper that you want to make those mistakes. You want to see what it looks like, and then we can tweak it accordingly. But anyway, and just having said that, I mean, there is a lot of, there are a number of different factors that go into a plan, especially a financial plan for a business. It's quite a bit different than a personal financial plan. So, obviously we want to know about the goals and sort of where your mindset is, short term, medium, long term for the business. But there's a lot of different things to consider as well, such as, and this is one of the reasons that I look at, you really need to have 3 different plans. So for example, obviously strongly recommend that everyone has a current and updated will. So that's your part, that forms part of your personal plan. But does that will mirror up with the business plan? And oftentimes I find when I'm speaking with clients, it doesn't necessarily do that, because you might have been in a situation a number of years ago where you had your will updated, then you put your entrepreneur hat on, you go and start your own business, and you might have a partner, different shareholders, and you have shareholder agreements that are put in place. Those shareholder agreements need to be reflective in the will, in the sense that they both need to be the same. So you have to have the same, I guess, end goal for both structures. And oftentimes what happens is it's almost an afterthought. The will's done, put away, nobody wants to think about dying. But down the road, as the business continues to grow, if that shareholders agreement is in place, buyers, then we really need to ensure that it's in sync. Another thing as well that I think is really important when we're talking about the business financial plan as well is, do you have family members involved with the business? Are they active in the business? Is it somebody that you are, I guess, comfortable with? Is there any family dynamics there as well that could have an impact on that business? If you don't have somebody perhaps at arm's, if there's nobody in the family that runs the business, we really need to look at that structure as well, kind of map it out and make sure there's a nice organization chart, so you can just kind of put pen to paper on that. And through that process, it's important not to forget about, so do you have family trust? Do you have holdcos? Do you have an incorporated company? How many different incorporated companies do you have? How many shareholders are there, and that sort of thing. So, I guess my point to this is a very different type of discussion when you're getting into financial planning for businesses versus personal. Personal, I would say, is not simple. It's a little bit simpler in the sense that, we want to collect information, statements, personal financial information, that sort of thing, understand your goals and concerns. And again, when you get into the business, there's a lot more that goes into it. So, for example, one of the things that I always, speak with my small business owners about is, what's your exit strategy? So again, what is that plan to wind down that business, whether you're selling it, passing it on? Because over the years, and so many times, and especially when it's in the banking field, we would see clients coming in and they would have, perhaps they had somebody to purchase the business. And, what happens is a lot of times it gets right down to the 11th hour. And when everybody's ready to sign the documents at the lawyer's office for that purchase to go through, the sale of the business to go through, what happens is the small business owner realizes, oh shoot, I didn't have things structured properly. Oh shoot, I'm going to pay too much in taxes. What can I do? What can I do? So oftentimes in my experience, what's happened is that, the small business owner who's looking at selling the company just says, what, let's take a time out on this. I don't want to sell it right now because I don't have the right structure in place to ensure that, that wealth, I'm going to retain a lot of that wealth. And so oftentimes what happens is when it's put on pause, it could be 2, 3, 4 years to get everything sorted out before that sale goes through. The risk obviously associated with that is the individual that you're going to be selling the business to still going to be interested in purchasing that business at such a time. And, sometimes there is, and sometimes they're not. They may have moved on as well. So, financial planning for businesses is extremely important. It's one of the things that, my conversations with entrepreneurs over the years, I find that a lot of folks are focused very much on the business itself, on the growth, on the day-to-day, but don't really consider that exit plan. And the reason why I want to talk about that today is, just keep in mind, so what is that action plan? So if you were going to crash test that plan, if you get sick today, who's your key employee, if you have one, to run that business? If you were to pass away early, for whatever reason, do you have a will in place? Who again is going to be taking over that business, or what is going to be happening to it? Likewise, I think the biggest thing as well is what's going to happen at such time that you want to sell it or wind it down. So we just want to make sure that things are done in a very tax efficient manner. So my ask of you is, if you don't have 3 business plans or 3 financial plans in place, one for your personal finances, one for the business, and one for the sell, or what's your exit strategy on that business, you really should have that done. If you don't have somebody to speak with, feel free to reach out, and I can definitely provide some advice on that. But it is, I find, crucially important for entrepreneurs to make sure that you are thinking about that exit strategy. Studies have shown us that we just know, with an aging population as well, that within the next 10 years, we're expecting 70% of the small business ownership to be changing over the next decade. That is a huge number, and as an entrepreneur, you absolutely need to be ready for that transition for yourself as well. So that is my advice, my recommendation for today. If you have any questions, feel free to reach out to me either through the one of the few Facebook pages, or don't hesitate to reach out by email as well. So thank you for joining me today, and look forward to chatting with you again, and we'll talk to you next time. Bye-bye.